This is Smart Investing with Mike Wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Wren.
Well, hello, everyone. You've once again pressed play for this podcast of the Smart Investing Show, where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And with the entertaining portion is the producer extraordinaire and part-time comic and all of that other stuff, Mr. Chris Martin, that's sitting on the other side of the table from me. And he's got his Bon Appetit magazine that is insulating the microphone from the desk that we're sitting at. And he's got a different colored, Monster Rehab peach tea and energy drink.
Yeah, I'm in rehab now.
Okay. Is that what? Yeah, rehab. I wonder if that's a big seller, like at those clinics.
Yeah, it's better for you.
So how are you doing today, Mr. Chris?
I'm okay.
That's good. That's a good answer. So I might as well be interviewing a child, everybody. So we'll move on. I'm okay.
It's sad that I get this energy drink because it's not carbonated because I'm old enough now where I don't like the carbonation.
You don't like gas in your water?
I don't like it. That old now.
Mm-hmm. So we're recording this show today. It is, what's the date today? It's Friday, July 20th. And it's been hot for a while. We've already had some fires, so it kind of feels a little bit to me like it's already August, but it's not August yet. It seems like it got hot kind of quick. So my brain, since I am a human being, just like everybody else, my brain's always searching for patterns, and I'm thinking, I feel kind of like August. So this show is about 3 weeks ahead, but for the type A moms out there, it's probably not 3 weeks ahead. Maybe the title of this show is... almost time for school shopping, isn't it? I mean,
sure.
I
always take my kids and I'm like, okay, what stocks do you need this month? We always.
No, I mean, Peaches, there's probably not that anymore, but it's truly, I would think Target, Shopko, all those stores are really close to having back to school sales.
Walmart already had all their school stuff up. I mean,
really? Okay.
Like 2 weeks ago.
Okay.
Yeah.
So I'm not early. Okay. Why am I bringing that up? Well, emotionally and maybe factually, I get the feeling that we are in a time where most folks out there are looking at their portfolio that's gone up since, if they reinvested it or if they stuck it out since 2008, it's gone up since 2008. It hasn't gone straight up, but it's gone up enough for everybody to notice. Number two, if you want to talk, quote unquote, the general stock market since that time, it's gone up. And since 2008, today is 2018. Oh, by God, that's a decade. So we've gone through 10 years. I don't know. It seems pretty darn quick to me, actually, but I think it depends on your age, I think, and how busy you are, how quickly time passes.
Yeah, like say if you're, I don't know, stuck in a cave in Thailand, I'm pretty sure time moves a lot slower.
I would think.
Than it does out here.
There's enough period of time that people, I think, pretty much readily feel and readily realize that their investments have gone up for quite a while. The stock market's gone up for quite a while. And now everybody's wondering what's next. In fact, most people have been wondering what's next for the whole decade. Because when that negative of a market happens, people are looking for more negativity. They're looking for the next negative market. And now that they haven't seen anything that makes sense to them in terms of finding a pattern to their investments for the next decade, people are literally willing to, hitch their wagon up to kind of any idea just so there's a plan, just so there's an idea. And hitching your wagon up to somebody else's idea or another company's idea or maybe a sales pitch, that's not going to be advantageous to you because you're probably going to be accepting of another idea or another plan that isn't objective, where the person telling you that they think the world's going to end, the person telling you that they think that that trade wars are going to happen and that profits are going to be lower, or there's a large company out there and their strategists are telling this. All of those sources pretty much have an axe to grind. In other words, they have a motive. What's the motive? The motive is to get you to give them your money. And they're trying to tell you how smart they are. I'm here to tell you that you don't have to approach it that way. You might feel a little bit unsettled or uncomfortable because, you've made money for a decade, and we all know that the market will have to go. It always goes down at certain times. Sometimes it goes down a little. Sometimes it goes down a lot. Sometimes it stays down for a while. Sometimes it stays down for a very short period of time. And we're trying to figure out, as investors, gosh, how are we going to deal with this? How are we going to be comfortable? Am I going to be okay? So on and so forth. Well, I was trying to think of something that normally happens no matter what the volatility of life happens. And as your kids get older, no matter what's going on, no matter how easy they've been with so far this summer, or no matter how difficult it's been with the kids so far this summer, the highs and the lows, no matter what, there's back to school shopping. No matter what, it just kind of happens. And it's something that you do because it's kind of needed. And when you're talking about back to school shopping, we're talking about supplies, we're talking about clothes. All of a sudden, you might be mentally thinking of your kids another year older. What are the activities that they're going to be in the next year?
How much free time am I going to finally have again?
Yeah,
gone?
Exactly. You're kind of projecting forward, which is always, I would think it's always a positive thing because you're probably putting a plan together for the future. So when you're shopping, back to school shopping, you've got needs versus wants, okay? So we've got the supplies that you need and some of the wants. You might have some wants for your own kid, or your child probably has some wants for themselves. They're probably having to do with style, probably having to do with fitting in, probably wanting to not stick out like a sore thumb, wanting to be like everybody else. The kids want it to be smooth, and you want it to be smooth. There's some things they need, some things they want. Then you've got style versus function. You've got, okay, what's stylish, what's functionable? Then I have long-term versus short-term down here. Pens, paper, that stuff is used up. If it's computers and thumb drives, that stuff gets used up at a more slow rate. If it's fashion, that's going to get used up really quickly, either with fashions changing or if your child is growing still. They're going to outgrow the stuff. And right at the very bottom of my list here is probably the most important one to a lot of people. It's like, okay, I know that I'm going to need this stuff. I know that I'm going to be having to spend this money, so I'm going to try to find a sale. Okay? Doesn't that make sense, Chris, what I have written down or what we've talked about?
Yeah, especially if you're shopping for multiple kids.
Oh, yeah, exactly. Or multiple kids is multiple years and so on and so forth. So no matter what's happening in life, you got to do some stuff like that. And of course, my whole industry and your mom and dad or your grandma and grandpa will say, no matter what's happening, you should save for yourself. Well, this show isn't about saving. If you want a show about saving, that would be Dave Ramsey. This show's about investing. The two go hand in hand, but the two do not overlap. I think when one show ends, the other show begins, and so on. So we're not talking about saving, which you should already know, but we're talking about investing. So what I'm trying to concentrate on myself, because I know as well as everybody else, the market's gone up for a decade. I would think that I'm not planning for another decade of upward movement without one or two downturns. That's just me. Do I know when they're going to happen? No. Do I really, really think that we're going to have a couple downturns in the next couple decades? Yeah. What's the length that you think they're going to be, Mike? Oh, I don't know. I'd say 6 months to, 18 months, somewhere in there, downturns. How far down? I don't really know. It doesn't really matter because no matter how little the stock market goes down or how much it goes down, the media is still going to paint both of them as Armageddon. So it really doesn't matter to me. If it's very, very small to me, I still know that most everybody out there in the media is going to say it's the end of the world. So that to me is kind of immaterial. The severity of the down market kind of doesn't matter anymore because, like I said, most of the people listening to the podcast and most of the people in the media, they're going to paint it as, look out.
What does this mean for the future of the world?
Yeah, exactly. So when we've had a good decade behind us and we have a little bit of apprehension going forward as to what's our plan, well, let's just stick to what we know. We know that we need to have good investments for the long term. Number two, it would be really helpful if you were going to try to make yourself more comfortable with a down market than trying to avoid the down market. In other words, let's say, I think a good analogy is that Chris here, I happen to know with I have good sources that Chris loves snow, right?
Yeah. let me tell you something about your sources.
Speak louder into the mic so we can all hear you because we want to hear these.
I hate snow. I broke up with a girl because she wanted to teach me how to ski.
Did you really?
Yeah, I did.
Was she good looking? I just wondering your level of conviction.
She was a cheerleader in high school.
Okay, well, that's good enough.
She wanted to teach me how to ski, and I thought, well, there's one reason to get rid of her.
Okay. Your microphone was kind of breaking up there in the end.
It's just my
voice?
Yeah.
Okay, or your connection? Your connection to the real world or the connection to the microphone?
A little bit of both.
So we know that Chris hates snow enough that a hot girl wants to teach him to ski, and he tells her, he basically kicks her to the curb. So you hate snow?
Yes.
Okay, so every year we get some snow. How do you deal with it?
I just tell myself I'm not, I don't live in Tornado Alley.
Okay.
So I got that. I don't live where there's earthquakes. I don't live where there's monsoons. So I have to deal with something. So
but I still hear you bitch when it snows.
Well, yeah. I mean, it's like the old Colin Quinn thing where when he goes to buy cigarettes. I can't believe their cigarettes are $8 a pack. Well, you don't want them? Well, no, I'm just saying. I'm still going to buy them. That's just the way snow is.
Okay, so you haven't moved away. You still live here. Okay.
Right.
And you haven't paid to have your driveway heated electrically, so you don't have to.
Not yet. No, it's on the list.
Okay. So, I mean, you could try to avoid the snow altogether is what I mean, is you could try to pack your whole family up and move to some place that doesn't get snow. That's a possibility.
Sure.
Okay. But it's kind of severe, don't you think?
It is, because, I mean, you're uprooting, you're getting a new job,
yeah.
Your kids. It's a lot of hassle for, 4 months maybe where we have to deal with actual snow.
Yeah,
the
perfect.
rest is just cold.
Yeah, perfect. So anyway, let's liken that to the stock market. So many people out there and so much of the media wants to tell you, the investor, to move to the desert to avoid the down markets. In other words, they're willing to tell you so many damned ideas that they have that you can, quote unquote, avoid the down market. Well, yeah, you can step one, you can put all your money in the bank. You're going to avoid your investments going down straight away because they're not going to go down if you're in a bank, At least they're not going to go down because the stock market goes down. They might go down because of long-term inflation, but that's another show. We're trying to keep it simple. You're worried about bad weather coming, so you can go to a cave that floods in a foreign country and go deeper and deeper and deeper and deeper and deeper. Pretty soon you need professional help to get out. Chris is going to, he could actually move away from the area to get rid of snow, but that's kind of severe. Might not be that cost effective. He could just buy a plastic shovel and go out there and shovel snow, or have the kids do it, right? Or the wife.
Yeah.
Or the neighbor.
It all depends on how much anger I want to hear later on from everyone. Can't believe you made your wife go shovel. I hate snow.
So, do you see what I'm saying? I think you, the listener, can understand what I'm saying right now, is that Chris moving away just to deal with the snow, it's kind of an extreme move. And that's how I feel about most people when they invest. they're kind of always looking for the extreme move to do. Okay, what's the most extreme thing that I can do with my money to avoid the market downturn? And it's like, why are you trying to do something that's so extreme when a down market never killed anybody? You know, it's just snow. It's just a down market. It doesn't last for forever. Okay?
It seems like it lasts forever.
Exactly. But nobody dies. It seems like it lasts forever, but you know now that it doesn't. I mean, anybody listening to this podcast probably lived through and had investments in 2007, 2008, 2009. And look at you now. If you're listening to the podcast, I would hope that you're alive. Otherwise, that there's some little facts about reality that I don't understand.
We'd like to welcome all the ghosts to Smart Investing.
All of the spirits. So you've been alive.
They probably do listen to this in hell. This is probably piped through.
Yeah, all the rooms have it.
All the elevators.
So, yeah, quit trying to be so extreme when something that doesn't kill you in the first place. So let's be accurate with what a down market is. It doesn't kill you. The prices of your investments go down, but you still would like to earn money for your future expenditures when you want to work not at all or work less. A lot of people call that retirement, but retirement, it's such a word that everybody's kind of bastardized now that I try to get away from it, because truly as people age, and I think we see it now with the aging population being so much diverse, that it's different for everybody. I was watching that Comedians in Cars with Getting Coffee with, there's a new episode with Alec Baldwin.
Oh, okay.
And him and Jerry Seinfeld are talking, and they're saying that Jerry says, I think that when we grew up, and they both grew up, I think it was in Massapequa. It's a little town on Long Island. Okay. After the war, they said, I think that you and I were the first kids that had a childhood. He says, I don't think our parents had a childhood. They just kind of grew up. And he says, and we had this taste of a childhood, and we kind of got it in our minds that we can really perfect this when we have kids, So, and I think that is kind of happening a little bit with, let's use the word retirement. I think it used to be back in the 50s, you got your pension and you tried to live as healthy as long as you could and tried to have as many cookouts and have the grass cut and do your, national park vacation. Maybe, if you're talking higher income level, going to Europe, and then you died. And people now are living longer. And so there's a lot more time to do a lot more different things. And you've got, back in the 40s or the 50s, you had a bad knee or a hip. You just had a bad knee or a hip. You were screwed up till you died. Now you can get a new hip, a new knee, a new eye, a new elbow, a new shoulder. They can do all kinds of stuff. And so...
Well, and we're living healthier, too.
I guess.
Back then it was, let's smoke at work, let's smoke here, let's smoke.
Yeah, you're going to see the fatalities have gone up with something called the smartphone, where people just can't not put that thing down while they're walking across the street and or driving.
That's not health, that's Darwin.
Yeah. And we come back to the cave, but I digress. So anyway, yeah, it's changing. The landscape is changing all the time. It seems like an exponentially increasing rate. I'm aware of that. So that's how come I say when you work less or not at all, that's more like the definition of retirement. To me, the definition of somebody's retirement is you've been putting all your money in these investments, and now it's time for those investments to pay you back. And that's a whole nother level of trust. It's a whole nother level of knowledge. It's a whole nother level of fear for the client, because you've been putting money into all this stuff and now it has to pay you back. And it's like, that's change. I'm not really used to that. So I'm getting a little bit off track, but the show I talked about back to school shopping. What did I mean by that? We still have to do some things. No matter what bad weather that we perceive is coming ahead, and whether it's going to be a normal winter or a worse than normal winter or a lighter than average winter, we still do some things. There's still going to be, if you've got kids, back to school shopping. There's still going to be having to buy them some winter clothes and so on. And in my scheme of things, I still have to invest. You, the listener, you still have to invest. So what do? Well, we just approach things in a very pragmatic way. First thing that's nice is to concentrate on what companies out there are going to continue to have really good repeating business no matter what's in the news. In other words, what are the human behaviors that don't ever change when it comes to people living their lives? When you wake up, what do? You probably check your cell phone, okay? Are you ever very far without your cell phone? Okay, well, probably in companies that make the guts for the cell phone and the companies that sell you your service, I would imagine that no matter what kind of news is out there, you're still going to be checking that phone. You're still going to be updating it, and you're going to pay your monthly cell phone bill. Those are good companies, good repeating cash flow. What else you going to do? You're going to get ready and go to work. Hopefully you might be using some sort of soap and shampoo and some hot water, so we can avoid the hot water with the utilities and the electrical utilities. I think there's better ones, but look at the soaps. It's probably going to be manufactured by Unilever or Procter & Gamble or maybe somebody else, but those are the two biggies. Your toothpaste, your hair care products, your makeup, your contact lenses, your whatever.
You know what I appreciate when people, before they go to work? Clothing.
Yeah.
Wear it.
Yeah, it can be. It's clothing is tricky, wherever you're
But
buying
it could be
from.
just Fruit of the Loom underwear.
Exactly. But where it's more than likely than what store you're buying it from maybe or where you're getting it. But yeah, that's definitely a basic. Your morning cereal, if you're having some cereal. Okay, what after that? Well, you're probably getting to work in some way. You might be burning some fuel. You might not. You might be one of those people in a Tesla. So what else you going to do? You're going to go to Costco. You're going to go to Walmart. You're going to go out to eat. You're going to do all of those things. You might eat out a little bit less than normal, but those are some very, very ingrained behaviors that drive a lot of economic activity. You can concentrate on those when we're looking at companies, and it goes right down again when we're looking at those types of companies and human behavior, needs versus wants, style versus function, long-term versus short-term. And what's this final one? Maybe try to find a sale. And since I'm in the investment world all the time, virtually every day, that's what I kind of try to do. How do I go about finding sales and what is a sale and so on? I try to find in a market like this, I try to have a very high conviction level that the company that we own or the companies that we own, that their profits are going to be steady and increasing over time, that they're really well run. Number two, I like them to pay us dividends because one thing that's really, really nice when we do go through a down market is if you're getting a dividend from your investments. Everybody talks about the fixed income investments. Oh, you buy a bond and you're still going to be getting your income from it. Well, that's true with the company too. I don't see why everybody thinks that it's a mutually exclusive sort of a thing. They're not. You can get really good income by owning companies. And a lot of the companies have increased their dividends every single year. So that's nice when you're going through uncertain times, when you're getting cash flow from your investments that is not based on the price of the investments. In other words, kind of like if you owned a rental house, the rent that you're getting from the renters is coming in no matter what. The value of the home, what you could sell it for, is disconnected in some way. You're not looking at that every month. You're looking at the check that's coming in every month.
It depends on the renters.
Yeah, exactly. And, that depends on the quality of the property then probably.
And the quality of the renters.
Yeah. Which a lot of times if the property's quality, you'll get a quality renter sometimes, unless you're renting, to a rock star or somebody like that.
Or family.
Yeah, exactly. So, I look at those two things first, and then I try to look for any industries that I know where that the behavior hasn't changed, but maybe it's out of favor with the stock market. So I'm looking in the telecommunications arena. The average price-earnings ratio for the stock market is around 17, 18, somewhere in there. So that means that we're having to pay 17 times earnings or 18 times earnings for the average company in the S&P 500. That's for 2019 earnings. 2018 earnings, the average price earnings ratio is about 19. So if I have to average pay 19 times earnings for a company, I would like on average to pay less than that. That would be some sort of a deal. So I start scanning industries and seeing where they pop up. And the telecommunications industry tends to be 1 or 2 digits lower than the average. The defense industry tends to be, 18, about 6 digits, 6 numbers higher than the average. I look at the drugs and biotechnology, and there is a wide range there. You've got biotech companies that trade at like 22 times earnings instead of 19, and you've got companies that are old school drug or healthcare services related. They trade in the single digits for price earnings. So I can't lump the drugs and biotechnology all into one group. Definitely you have to do company by company. In the chemical arena, they're trading, what's odd is currently they're trading a little bit above the average earnings ratio, and for next year they're trading a little bit below. In the computer sciences and high tech, it kind of is, again, like the drug industry. It's a wide enough area that some are trading less, some are trading more, some are trading exactly at the averages. In the financials, those typically always trade at less times earnings than the averages of the S&P because they don't have – a bank just doesn't grow their earnings as extreme as somebody that's selling a new form of, let's say, Advil, just to make it simple.
Not a whole lot of brand new inventions at the bank.
Exactly. And then, here's the one area that I found that has been beaten up kind of recently is the food sector. Foods, cigarettes, drinks. It depends on the company, and I'm looking at the numbers right now in people like Pepsi and Coke. They're really well-known names. They're typically trading for above what the average is. But if you look at Philip Morris and you look at Campbell Soup and General Mills, and you look at Kimberly-Clark and Kraft and Heinz and Mondelez, those types of companies were typically very good earning investments while Obama was in office, and they've become out of favor. So as far as a back-to-school sale, those companies that are extremely boring like General Mills and Campbell Soup, looks like we can pay less than the average for those in the S&P 500, but also their earnings aren't going to be explosive either because they're boring. You're selling ketchup, you're selling cold cereal. You can't hardly get more boring than Campbell's Soup, okay? You're selling literally cans of soup. That's pretty boring. So on one hand, it's extremely boring and you're not going to get explosive growth. They're not going to come out, Campbell's Soup's not going to come out with a new cell phone. But on the other hand...
Now, new tomato soup with stars.
Yeah, but on the other hand, my gosh, it is so conservative that I would think that you might be comfortable with that in bad weather, so to speak. And by the way, we're mentioning names of companies like Pepsi and Coke and all these others. It's not a solicitation to buy or sell. Say, okay, so if you're going to act just by listening to the podcast, don't be stupid. You put some thought into it. Don't do anything just because we're talking about it. You can actually call me in person and, we can talk about it person to person. Imagine that.
Mike said Campbell Soup.
Yeah, exactly. But you see what I mean is it's so incredibly boring. But again, their current dividend is a little bit over 3%. And you're not going to get 3% at the bank on your savings. And, of course, Campbell's Soup isn't going to be as safe, in other words, as the savings account at the bank. But it's pretty damn conservative. You know what I mean? So those are
There's always going to be soup.
Exactly. So those, you can find some investments like that if you're wanting to not put all of your money into a bank. If you're not wanting to put all of your money into some stupid insurance product that somebody's trying to sell you, if you just want to be a touch more conservative than normal, then go ahead and be a touch more conservative than normal. But also don't expect Campbell Soup to have the earnings potential of Amazon. It's two different things. And again, like when you're back to school shopping, you're not expecting to get a lot of use out of a new pair of shoes that's in fashion and might be following a fad. You're just trying to meet the wants of your child, But if it's a decent ski coat and, it's of a certain size and you get lucky, that ski coat might last you a couple years, okay? Well, people think more long-term, typically, about school shopping and clothing for their kids than, unfortunately, they do in their investments. I've had people complain to.
That's because the investment doesn't wind back when
yeah.
it's not
I've
getting
had
the
people.
shoes it wants.
I've had people call me literally out of the blue. I'm kind of unhappy with the performance of my account over the last 3 months. Really? Well, then, what I'm concerned about is their definition of reality. I'm not concerned at all about their definition of performance because they absolutely then have no clue. When you're talking about decades of investing ahead of a person and they're worried about 3 months, something else is going on either in their household or in their mind other than the reality of the investment world.
My first thought is he's calling you because he keeps hearing in the back of his head, our investments don't look good. Call Mike. You need to call Mike. Call Mike.
Or it might be like, if you're so worried about the investments, quit calling him instead of bitching to me. Yeah, something like that.
Sounds like a you problem.
Yeah, a user problem. So how many minutes do we have left of this podcast?
About 10.
Okay, let's take a quick break and I'll come back and gather some thoughts. So we'll be right back after just a couple seconds here.
This is Smart Investing with Michael J. Wren.
You see, I'm in it for the lifestyle as well as the great investment.
Yeah, technically we're doing a couple things on the hush hush from Uncle Sam.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.
This is Smart Investing with Michael J. Wren.
Isn't this great? Doesn't get better than this, does it?
Please tell me that's not true.
Okay, we're back. So again, let's circle around back to the top of the show. Why are we talking about what we're talking about? Well, because I get the feeling that most people out there are a little bit uncertain and a little bit unsettled. We're always uncertain. No, none of us can tell the future. But looking in the rearview mirror and us having, 10 years of smooth sailing, we start to get that sneaking suspicion in the back of our head. It's like, I think the road might be, kind of rough ahead, but I don't know how rough. I don't know if I should try to take a different route or not. And that's the thing. People are kind of worried people are wondering right now if there is a different route and if they should try to take a different route. I mean, there's all this technology out there and so much information that's available on the internet and blah, 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 blah. Maybe I should do something different. I'm looking for a way to reassure myself. And I'm here to tell you, you can take a look at your investments, but I would counsel against looking on purpose for something new, a new plan or a new idea. I say that because, and I'm worried about even saying it because there's a lot of investors out there that I don't think they're invested correctly. And so I'm going to be the one person telling them, I think that you should get rid of your packaged products and own individual companies. But that's going to be the extent. I don't have some sort of a theory, a mindset of a dogma that this is going to happen, therefore we should do this. My "this is going to happen" thing, in quotation marks, is going to be telling you pretty much what's happened over the last 100 years, is that the downs are temporary and the ups are permanent, and you better find some investments that you're okay owning through both of those events, because that will make you the most money. And so while people might be looking for a new way to reassure themselves or a new plan to try to insulate themselves for some sort of a future down market, don't do that. Just think of how you can make yourself more solid when we do get a snowstorm, because you know that the snowstorm of the down market isn't going to kill you, and it's going to be temporary. Those are accurate statements, okay? It's not optimistic or pessimistic. The accuracy of those statements is where you should find, not even the statement, the facts, the accuracy. You can have all of the opinions that you want in the world, but your investments going down on your statement doesn't kill anybody. It's incredibly unpleasant, but it's not a life or death situation. And it's temporary in nature. Your investment account has never gone down all the way, all of the money to zero. Okay? If you're listening to the podcast, you're probably more of a reasonable person where you've got more than one investment. They're probably fairly decent. In other words, you've already been through snowstorms. You've already been through Decembers and Augusts. You know what they're like. Okay? So use that to your advantage. Try to make the accuracy of your experiences and the accuracy of the facts counteract the media and some of the insecurity that you feel inside yourself. So instead of trying to find something new, try to embrace what's worked in the past. And maybe if it's worked in the past, guess what? You have past experience, and you can fine-tune your behaviors towards the future. So if you see a pattern where you've tried to make big thematic changes in your investments, maybe now's not the time to make big thematic changes. Maybe you just do a little bit of nip and tuck, a little bit of small things here and there. Maybe you've got that one credit card or that one bill out there that's kind of bugging you, and yeah, my investment accounts have gone up for a decade. Maybe I should just take a little bit of that profit and bang, pay off that debt. Go ahead, because you're going to save yourself whatever interest that you're having to pay on that debt. If it's really, really going to improve your outlook on life and make you a better investor when the next market downturn comes, for sure do it. Next thing, why don't you focus on some dividends? And I'm not even talking looking at new companies' dividends. Look at the companies or look at the investments that you own right now. If you own mutual funds, more than likely you're going to be really disappointed with the dividends that you're getting. And more than likely, if it's a fund that pays a good dividend, you're going to be fairly disappointed with its principal growth, because very, 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 very few mutual funds will give you both in a reasonable manner. So concentrate on what you own and look at the dividends that you've been getting over the past decade and see if they've gone up. It's what you own. It's a nice review. And you might find, oh my gosh, this company's raised their dividend every year for a decade. Back in 2008 when I owned it, they were paying me 3%. And now, based on my original investment, my dividends are equaling like 7% on my money. That's really good. And you're right, it is really good. Well, I never would sell that company in this environment. I'm going to be getting good money even when the market goes down. You're right. So maybe you should buy more. Maybe you should find another company like that one that you own that is either in a same industry or, get this, maybe even in a different industry. You see what I'm saying? Try to reassure yourself with accuracy of the facts out there, and reassure yourself even with your past experiences. Even if you've had mistakes, who cares? At least it's solid. At least you know that in fact happened. This is what you did. This is what your behavior might have caused this to happen, might have not. But it's just more solid. It's not some pie in the sky thing. And what it also avoids is, thankfully, when you do that, it avoids my industry trying to sell you crap. It avoids the people that are telling you the world's going to end and you should do this. It avoids the people telling you that marijuana is going to be legal nationwide literally tomorrow and you should invest in all these really cool new hemp pot products, okay, or stocks. Okay, it avoids all of that crap. It avoids the really, really fancy building built by insurance agents that have sold life insurance and annuities to people literally their whole lives and made bank on doing that. I don't know what their clients did, but I know what the agents made. It avoids that.
They must be doing well because it's such a pretty building.
Exactly. Well, their client, but what are the clients doing? Don't look at what the investment person has. Look at what their clients have. Don't go off of what the investment person says they'll do. Go off of what the investment person's clients say that they have done. And don't be so quick to just disregard or not think about your own past experiences and look at them accurately. Look at the dividends that you're getting. Look at them. That will help you, be able to decide, oh, I kind of like that. I will be okay owning that investment through the next bad weather. Big snowstorm, light rain, who knows? I don't know what it's going to be, but we know that come fall, weather's going to change. We know that after the stock market's gone up for a decade, it's going to go down at some point. Even if it hadn't gone up for a decade, even if we had a down market, let's say 3 years ago, I'd be telling you on average over the last 100 and some odd years, the market typically goes down 3 or 4 times in every decade. So it can happen it can happen at any time for any reason, because the market, remember, is just like a big fancy place like Pike Street, and there's a lot of people with emotions there. And sometimes there's a lot of people shopping. Sometimes it's rainy and there's not so many people there. Sometimes people have flush cash in their pocket and they're just completely willing to buy the handmade hipster cutting board. They're willing to buy the ugly scarf. They're willing to buy the really trick teakwood set of salad spoons. And I am definitely going to pop for that pepper huckleberry jelly. And sometimes they're just there looking. They'd rather hold on to their money. So don't try to predict what's going to happen based on human behavior in a free and public market. It is exactly that, a free and public market. Go there to people watch. Don't go there to try to predict the future. Same thing with Wall Street. People watch, chuckle to yourself. For God's sakes, don't try to predict the future. And I'm Mike Wren. This is the show Smart Investing. Chris, any information for anybody?
Yeah, don't forget that if it's easier for you, you can go to our site, smartinvestingshow.com, and there's a link to YouTube, and you can just listen to this show while you cruise the internet.
Sure.
You can just stream it that way.
Okay, well, thanks for listening. We'll be back again next time with hopefully some more good info for you.